get insurance, you write your premium every month, goes into the fire pit of money, right? And at the end of the year, you get this 20% renewal and you just keep doing it. And she's like, you're an idiot. So now the insurance is paying him. And he's like, oh, well, this isn't that bad.
I'm curious about the nightmares.
She had gone to see this doctor, and then they switched from Anthem to Humana, but she kept seeing that doctor, didn't realize the doctor was out of network. And then she gets this giant bill of like $400,000.
Welcome to the Cincinnati Business Podcast, where we give you practical tips and tricks to grow yourself and your business. And brought to you by the Cincinnati Podcast Studio. I guess I just got to say, why were you even drawn to insurance?
So I wanted to, I'll be honest with you, I worked at a recruitment ads.
Okay.
And I, for a year, sold like people that were hiring. And I was working there for a year, knew probably wasn't gonna be long term. And I realized, I was like, what job will somebody always need? What product, what thing will someone always need that will never go away? And I like insurance. Like everyone's gonna need insurance. Everyone's gonna need health insurance of some fashion. So that's why I was drawn to insurance, is because it's something people are always going to need. And I can, my goal is to become an expert in it.
Yeah.
And, as people say, I may not be the brightest guy. When it comes to insurance, I'm very smart.
So then let's back it up even further though. Then why sales? So
I'm not a salesperson. I'm a service person who did service for like 12 years. Huh. And then at one of my employers, I got a person came around the corner and said like, hey, like we're getting these leads and we don't know what to do with them. And the carrier's asking, what should we do with these? And I just kind of raised my hand like, I like doing new things. So I took her up on it. And she basically, I did my normal job, service job from 8 to 5. And then I would do this other thing, which is now known as sales, from 5 to 8. And so after about a year of that, working 8 to 8, the president of the company came in and said, like, what do you like about what you do every day? I was like, I really like this thing I do from 5 to 8. And she's like, well, what do you do from 5 to 8? I was like, oh, I'm, get these leads. I've been, helping these small businesses with their insurance and selling to them direct and doing these things. She's like, oh, well, are you making more money? Like, is someone paying you to do that? I'm like, no, I just like doing it. And she's like, you're an idiot. Like, you're working all these hours doing these things. And so she went and looked at the history of sales. I had like a 75 or 80% close ratio on these random groups that were coming to me. And so that company actually started a retail side of things. And she said, we want you to be the head sales guy. And I'm like, she said, we want you to be the broker. And I was like, I don't know how to be a broker. Like, I can't do that. She's like, you're already doing it.
Yeah.
I was like, oh, that's it? That's how you be a broker? Oh, I can do that. And then the rest is history. Like I just started, that was my full-time gig, and it's been amazing transformation ever since.
Well, I know you're using the fancy language of broker or customer service relationship, that sort of thing. But like the reason why you're good at what you do is because people trust you. Mm-hmm. That's one of the things that you and I, when I first met you, it was easy to trust you. That was one of the things I learned about you. And because I didn't feel like you were the used car salesman of sales kind of thing, like it felt like you were a real person who actually understood like, hey, this may not be the right thing for you, and that's okay. Like, I'm not going to force something down your throat if you don't need it, kind of thing. And
that's the kind of key when you said, why sales?
Yeah.
And I said, I'm not really a sales guy. I truly feel like I'm a consultant to where I feel a sales guy, like there's people out there just say, hey, here's the lowest rate, sign right here, you're golden. And then they never talk to you ever again.
Yeah.
Right. That's not how I roll. I say, hey, here, this is the lowest rate. I don't know if I'd go with that. Like this, that, or the other. Like, but this over here is a little bit more. And this is how it's going to affect your employees, and this is how it's going to do this, and dig into and ask them, not what the lowest prices, but like, what do your employees want?
Yeah.
Like, are you in this just for the lowest dollar? There are some people out there. I want the lowest price. I do not care. All right, well, there you go.
Yeah.
But most people, I only really focused on businesses between like one employee and 50, 1 to 100 employees, but really 1 to 50. And really my average size group is about 9 or 10. And all of those people are really like family owned businesses who like their employees are more employers see their employees more than they see their families.
Yeah.
So they want to make sure that those people are taken care of. So it's not about the dollar. It's about making sure that their employees will get the services they need for this cost that they're providing. My job is to make them look good and offering this very expensive product and finding a way to make sure that it helps all their people and keep the cost down.
That makes sense. So you're coming up to these businesses and they're saying, hey, we recognize that we need group health insurance. Because obviously there are people out there that do the work of like, hey, we'll help you find the right marketplace plan, we'll whatever. You are specifically like, hey, we're going to help you set up an health insurance process for your business, for everyone in this business. That's kind of the way that you work specifically, right? Yeah.
So basically I have a company that, says, hey, I have 5 employees that, we are to a point where I'm losing good people because I don't offer insurance, but I don't think that I can afford it. And I say, well, let's just find out. Let's fill out, the online application, and you're not buying anything. Let's just see what the cost is. You can do 2 different ways. You can do it, see, not used to it. You can do it 2 different ways to where you can get a base rate and say like, hey, here's the best case scenario rate. And I always kind of recommend doing that first, because it's like, if you've never offered insurance, if I give you this best case scenario rate and you can't afford that, then you don't want to go to your employees and say, hey, we're thinking about offering insurance because we already know you can't afford it.
Yeah.
And then you take them to the individual market, you put them on, all the other options that are out there. And so that's what it's really about. It's about, hey, let's find out if you can afford it. And if you can afford this price, then we'll go to the applications part, show you the actual costs, and then figure out which direction you want to go in.
So I think the most interesting thing for most people when they're getting into some of these scenarios is the messes that you've probably seen when you walked into some of these businesses. So I'd love to hear some examples, like walking through like, because obviously you are kind of like you come in a lot of times as a fixer. Like you're like, hey, this is the issue they're having. Let's figure this out and solve it. So like walk me through what is kind of some of the crazy scenarios you've seen?
So the one that sticks out the most is one of my client I've had for 3 years. And actually the way that this person became a client was they called the wrong number. Still not sure how exactly it worked, but I answered the phone. I was like, hey, it's Scott. And like, yeah, we're looking for so-and-so. I'm like, yeah, he doesn't work here. Or I know that broker because I work for a facility that knows all the brokers and I know where he works. And she's like, okay. And I was like, well, hold on. Like, it's a holiday weekend. I think it was Memorial Day weekend. It's a Friday. And she called and she said, I said, what's wrong? She's like, oh, Form Fire, we can't figure out X, Y, and Z. Form Fire is an electronic application. And I said, well, like, it's a holiday. No one's bringing me around to help you, but I'm here. Like, let's just call Form Fire and see what we can do. So we called Form Fire, got her situation figured out. And she hung up, or she said, oh, thank you so much. I really appreciate it. Kind of hung up, went back to my business. 5 minutes later, she calls me back. She's like, so I talked to the owner. And if you're going to do that kind of work when we're not your client, what are you going to do if we are your client? And right there, I became the agent of record that day. And
dang.
So with that, the guy who is the owner, I mean, he hates insurance. Like, hated insurance, which in essence hated me, right? Like, you're, this guy. Yeah. And he sent me the renewal that he got from a carrier, and he got a 50% increase on his business. And so he got the 50%. And then in the email trail, because the broker sent him the whole email trail from the carrier and just said, oh, hey, like they're getting a 50, we'll lower it to a 30. Like, just make sure they sign this and good to go. Well, he was ready to cancel the whole plan. Just done. This is awful. So when I met him, I just met with another partner, friend of ours. It's Roundstone, which is a third party administrator basically for insurance. And I just met the guy, and they just told me about this product, and like it seemed like this group was the perfect fit to like introduce him to this guy. But I called the owner. I said, hey, like we just met like 5 days ago. I'm about to introduce you to a carrier that I just met, probably 2 weeks ago. It's not normally the way I do business, but I think this could be the scenario that you need for what's going on in your world. And he said, sure, let's set it up. So what Roundstone does is just it's an option for businesses that are about 20 employees and up, and it really gives the employer control of what of their insurance again. So what I mean by that is that right now, basically you get insurance, you write your premium every month, it goes into the fire pit of money, right? And at the end of the year, you get this 20% renewal, and you just keep doing it, right? And you call me, why did I get 20%? Nah, because the carrier said so. Sorry. And in this scenario, you can dig into it. And so you can dig into, hey, like what prescriptions are people taking? How many times someone go in the ER? How many times is this, right?
Without violating HIPAA.
I'm HIPAA certified. Right? Okay. So I'm allowed to see that stuff. Couldn't tell the owner who it was or what it was.
Yeah.
But yeah, like I can see all those things. And we found out there's 2 really expensive drugs. And so 80% of insurance right now is prescriptions.
Yeah.
So we put in a platform. It was called Sharks, and Sharks basically came in and said, "Hey, like this prescription costs, $100,000 if you get in the United States. If we go to Canada, it costs $20,000."
Oh.
So two plans that was costing this group $100,000 every year. Now it was $40,000. So so the owner hears all of this, and he's the engineer, and he's like, wait, so I'll know exactly why I'm getting my increase every year? I'm like, yes. And so this is like, when I spoke to him, it was towards the end of the year. So it might have been Thanksgiving now I think about it, because now it's all playing sense of timing. Yeah. Because it was Thanksgiving, and then December 1st was his renewal. Yeah. So it makes sense now. It wasn't Memorial Day, it was Thanksgiving. So December 5th, we come together and meet this guy, and their plan is going to be effective January 1st.
Okay.
And we said, hey, if we make this change, we have to make it decision right now.
Yeah.
Again, not the way I do business. Like I'm not the hey, sign here, we'll take 10% off. That's not how I roll. But I told the guys, like, hey, this is the option. So he listened to the whole thing. I brought Roundstone with me. Sat down, and he's at the end of the conversation, he looked at his HR, like, you good with this? CFO, you good with this? Nod their head. We're in. Let's do it. I was like, okay, we're doing this like right now. And so after 2 years, they are able to they took out $70,000 from their claims bucket, because it's now a self-funded plan. Yeah. And we're able to put it back into the business 2 years in a row.
Whoa.
So now the insurance is paying him. And he's like, oh, well, this isn't that bad. So like, I don't know.
Wait, what do you mean by that? Insurance is paying him. That's an interesting.
So basically, when you pay your premiums, right? You're paying claims, you're paying all of these things, right? Well, they have the claims bucket. Right. Mm-hmm. So there's 30% going into this fixed administrative costs. Mm-hmm. The 70% is going to this claims bucket that they kind of decipher between, hey, you need to put $100,000 in it to pay for all of your claims. If you don't spend $100,000, it's your money. So you get that full money back into your pocket. The business gets that money back. Nice. Instead of just going into the fire pit. Yeah. You get money back. So they had built like $150,000 once we fixed the pharmacy problem. Everyone else is pretty healthy. So he was able to take $70,000 out, put it into the business 2 years in a row.
So then how do people, I mean, that sounds like a crazy thing that you can actually be saving money like that on health insurance. Because everything, like from the buyer perspective, someone like me who's generally only been an employee, just sees it as I'm just spending X number of dollars every single month, and then that's it. That's all I ever do. But so from what you're kind of describing to me is basically what the employers kind of do is they have this bucket that they are paying for, that the insurance pays out from, but some insurance agencies won't give the money back and some will.
No, I don't. I never get the money.
Yeah.
The carrier.
Yeah.
If it's just a regular, it's okay.
Yeah.
If it's just a fully insured plan,
yeah,
the carrier keeps all extra monies.
Okay.
So they'll keep 100% of all the dollars. Mm-hmm. If you get on these level funded or self-funded plans, you get a portion of that back. Most level funded plans, you get 50% back. And then on self-funded, you get 100% back of your unused claims. Mm-hmm. And so that's the goal, right? The goal is to find out, as a consultant, what's broken? How do we go in there and fix it and still give the plans that they need?
Yeah.
And make it so that the employer isn't just throwing 100% of money into the fire. Now they're only throwing 30% of the money into the fire.
That makes sense.
The rest of it, 70% of it comes back into their pockets.
So like, is there a downside, a danger to a self-funded plan?
Yes. So the downside can be like, there may be a time where you have to write a really big check. Because if you're fully self-funded, you're going to there's a chance where someone has a $100,000 claim, you might have to write $100,000. But Roundstone is a captive. So there's a cap to the cost. So you already know ahead of time what your worst case scenario cost is going to be. Now, the way that everything works is that, doctor's offices get paid, hey, I went and saw you, they bill you 2 weeks later, yada, 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 right? Pharmacy, you get your drug. So what does the pharmacy want? They want their money right now. So there's a chance to where they get someone gets a really expensive drug, $8,000, $5,000, whatever it's going to be. Well, then they do that, and then Roundstone sends a bill to the group saying, hey, we wrote a big check, you need $5,000. Now they'll go to what's called a reinsurer, and then they'll get the money back because we already know what our max cost is, but you have to have that money in reserve to say, hey, this really big claim came to be able to pay that. So I would say that you have to be, for the most part, a cash heavy company, like you have a sum. If you're running like nickel to nickel to nickel, I would not recommend doing that. But if you feel like you have the cash and you can do those things, that a captive or group of 20 plus, the group that I'm talking about only has 20 people in the plan, and they had two years to get $70,000 back. And that's the best story that I've ever, and like the Roundstone talks about the group all the time. Like they're like, cause 20 is like their minimum. Like, you don't really like usually even the guy is like, I don't really want to deal with the 20 life group, but sometimes it works beautifully.
Yeah.
And I've got 2 clients, basically exact same scenarios of that size group. And so that's why that's the kind of the high I get is like, wow, this guy hated insurance, was going to cancel his plan for all his employees, gave this a shot. And 3 years later, they're like, it's rocking and rolling. It's amazing.
That's awesome. Now help me understand, because I'm sure there are people listening to this podcast who understand insurance. I do not. So I need a little bit of 101 here.
Yeah.
So you were mentioning 3 different types. Is that the main 3 types of group health insurance that a business can take on? Is kind of that like self-funded, level funded, and then something else?
Fully insured.
Fully insured.
Look at you listening.
I'm trying to listen.
You're amazing. So fully insured, basically groups from 1 to 200 could be on fully insured. But it's basically just writing a check, right? And you're gone. And you get kind of no reporting, you get no idea whys, but the cost is going to be, as low as it can be, right? The next level is called level funding. Level funding is like it's an in-between, right? So it's partially self-funded, partially fully insured. So what they do is they basically say, hey, we're gonna start this plan. This is all done behind the scenes. So the employees don't see anything, the group doesn't see anything. But they say each employee we're going to say is going to spend, say, $200 a month on insurance, right? So they put $200 away into this bucket. So every employee gets $200 every month into that bucket. So at the end of the year, if no one uses the insurance, you might have $20,000 in this bucket, right? Well, since you're in a level funded, they'll give the company back $10,000.
Okay.
And the carrier keeps the other $10,000.
Yeah.
So that's level funded. So there's almost no risk, no different than fully insured, but you have a chance to get money back. And they give you very minimal reporting, where at least, like I have a group that, they were on a level funded plan and there's only 10 people in it, and spoke to the lady. I said, can you send me the claims reporting? And so they filled out FormFire. So I saw all the, everything that the people were taking and whatnot. There's nothing on this report that says what's going on. And I look at the claims fund and there's $16,000 every month, $16,000 charge. Well, the only thing that could be is a prescription. Go back to FormFire. Nothing in. So I called the group and I'm like, I need you to send an email to your employees and talk to them and say, please don't lie about the prescriptions that you're taking. This is affecting what we're trying to do. And immediately she got a phone call. Oh yeah, that was me. I'm taking XYZ. And I went, that's why you got it. And she got it like a 75% increase.
Holy smokes.
So that employee decided that they were willing, it's a small business and most, that employee said, I'm affecting everybody. Like they went to the individual market.
Oh.
So they got off this plan with the individual market, and the group went from a 70% increase to 0, simply because I asked the questions. What's going on here? And again, difference between sales and consulting is digging into the situation. Why is this broken? What's happening? I didn't know who, what, why, or when, but I knew there was something that was going on, and it was all. And the way that the insurance works is you can fill out these claims all day, these forms. They send it to the carriers. The carriers have all this data up in the medical world, right? They know that Bob takes this prescription. So they come back and they'll say, oh, no, we're going to decline the quote because this, there's somebody taking a really expensive drug. And you're like, what are you talking about? You go to the person like, oh, yeah, whoops. I forgot I was taking that $16,000 drug.
Oh, my gosh. Huh. So then you're talking about one of the big things that it seems like you kind of come on the heels of is you show up when there's been an increase a lot. People hit these increases. Like, what is so scary? Like, what is, and I know I kind of cut you off because we didn't get to self-funded, but we kind of talked about it. But like, what is the way that like the normal business can avoid getting those increases? Is there anything they can specifically do? No.
The only thing they can do is get on a plan that can give us some type of data that tell us the who, the what's, the whys, and the wheres. Then we can go to the population and say to everybody, hey, like, we're going to cancel the plan, or, hey, we're going to, come up with, solutions of, hey, you're taking this really expensive drug. What are your thoughts about going to individual? You can't make anybody come off. It's, completely illegal. You can't force people off a plan. You can say like, hey, this is what's going on. And I tell every employer, like, do not, like, if you say it to Bob, you got to say it to everybody. Whatever we say to Bob, you have to say it to everybody. And so that's, but most small businesses know what's going on. Like usually most owners are like, oh yeah, Bob, takes this, he got this, or so Sally's pregnant, or so-and-so's got this. They know.
Yeah.
So at the end of the day, you just have to figure out, hey, is there a way to fix this? Do you get out of insurance? Do you go, there's other products out there. There's these ICHRAs, which is an ICHRA, which is Individual Coverage Health Reimbursement Account, where everyone just goes to the marketplace, and then the group helps pay for
the premiums. Yeah. So I was wondering if that sort of thing existed. It's basically just a way for them to put aside money and say, use this card that you're going to get or whatever to pay your premiums. Yeah.
That's usually the worst case scenario.
Yeah.
Because, the individual market, they're all HMOs, no out-of-network benefits. You also can't leave the state of Ohio. So in Ohio, if you get a marketplace, you get an ear infection in Florida, it's not an emergency, not getting paid. And a lot of people freak out about that. And I say, I'm 45 years old. I've never gone to a doctor outside the state of Ohio. I ask everybody who I'm talking to, have you ever gone to a doctor outside the state where you lived?
No. Nope.
But when you first heard it, what'd you do?
Yeah.
Oh my God. I can't. What if?
Yeah. Huh. Interesting. So walk me through this this kind of thing, because let's say we're a small company. We've hired our first employee or two now, and we're starting to think, what does it look like to provide health insurance? What's the process you kind of walk people through?
Sure. The very first thing I tell them is there's 2 negatives to offering insurance. And some people are like, you're a sales guy, starting off with the negatives.
Yeah.
Well, it's because I'm not a sales guy, and there's no point in wasting time, yours or mine, if we say these 2 things, you're like, oh, I'm out. And it's happened before. The first negative would be that if you start a group plan, so let's just say that you and your family are on the marketplace, and the company's thinking about offering insurance, and your cost should be $1,000 on the marketplace. But because of subsidies, and the subsidies means the government's subsidizing your costs, the subsidy is going to pay $800 of your $1,000, only costing you $200 for this insurance. And you're like, oh, I'm so happy I can write this check all day long. It's great. And then the company's offering insurance now, right? Well, you don't have to, and the company's insurance comes in at $400 a month. So you have to pay $400. Which one are you going to choose, the 400 or 200?
Yeah, the 200.
Right.
Yeah.
If the company offers a group health plan, you don't have to take the plan, but you lose your subsidy. Now you have to pay $1,000.
That's interesting.
So if the majority of your people are on getting subsidies, what I always tell people is your employees are like your kids. You're never going to please them all. You just have to find the ones that you are going to make the happy. You need to be the happiest. Mm-hmm. For me, it's my youngest. That 7-year-old has to be happy. The whole world goes to an end.
Well, okay, so that's really interesting. So then that's your one negative.
That's my one negative.
What's the second one?
The second negative is something that the employer can't control at all. And that's called a spousal carve-out. So again, let's say your wife works for a hospital system and she gets really good benefits, or government, or whatever you want to call it. You get really good benefits and they have what's called a spousal carve-out. So your wife is the nurse, you're on her plan, your company offers an insurance plan. Because of their carve-out, they can say, Brian, you have to come off the plan and go on to the plan that your employer is offering. So now this is costing $400. Her plan, the whole family costs $150. That can make you happy?
Mm-hmm. Nope, not at all.
Not at all. All right? You can't control it. There's nothing you can do about it. It is what it is. And so those are the first things I say is like, go to your population and ask everyone, hey, can you check with your partner's HR? See if they have a spousal carve out, and sometimes they come back and say, yeah. I had one guy who said he dropped from 30 hours to 29 and a half. Now he's not full-time. Now he's not eligible for benefits and stayed on his wife's plan.
That's genius. But man, so usually you have the employers go after that sort of information. You don't usually go after that information.
No.
Okay.
No. They know their employees. They know who they are. They're going to talk to them.
Yeah.
They're the one who's kind of looking to doing all this. And so that's the first steps, right? If they get through that step, then we go to the next step. Next step is, do your employees know that you're thinking about offering health insurance? Usually the answer is yes. Sometimes it's no. And why does that matter? If your employees don't know that you're thinking about offering insurance and you start asking all these questions, what does the employee hear? Does the employee hear I'm thinking about, or do the employees hear we're offering health insurance?
They hear we're offering, yeah.
Right. So then now you're the bad guy because now you've gone through the process. You can't afford it. All these bad things happen.
Yeah.
Right. So it's, the first step is seeing. The second step is saying, hey, do they know it? If they say no, you can get what's called the best, we talked about before, best case scenario rates.
Yeah. Best
case scenario rates, all I need is the age, gender, zip code, send it to carriers. Here's the best case scenario rates. Mm-hmm. Can you afford the best case scenario rates? We also, in the same sentence, can get the worst case scenario rates, which is the ACA on the group side.
Yeah.
So I can give you a range of best and worst. And then they decide, can we afford something in the middle?
So wait, that was interesting. I didn't know this existed. So the ACA offers group plans as well?
Correct.
And you're saying those are the worst case scenario?
For the business, because it means that they're sick people. Because there's no underwriting.
Oh,
There's no underwriting. It's just age, gender, zip code. Here's your rate. Here's everyone who is the 22-year-old's rate might be $200 to 70 and 65-year-old's rate is going to be $1,200. Everyone has their own individual rate. Yeah. But on the ACA and the group side, you can leave the state of Ohio and you can't get out of network benefits. So it's better than the marketplace. But in the group world, it's saying that, hey, the only reason why you're really on this plan is if somebody's sick or something's going on in your group.
Or would somebody say, like what you just said there, I would think like, what if there was a company that like the entirety of the way that their employees work is via travel? Like, is that when you start to consider something like an ACA plan or something like that because it offers insurance outside of the state, that sort of thing? Or are there other plans that work that way to help provide other insurance?
Anything that is not marketplace offers out-of-state benefits.
Okay. That makes sense.
Yeah.
That makes sense. And so if the organization, the employees don't know that they're offering, and you're starting to get all these best case, worst case scenarios, and then they say, okay, I think we can afford this. Then my understanding is you basically do like a big survey of the entire organization. Is that how that works?
So basically, I get 5 pieces of information from the employer, which is just company name, address, tax ID number, phone number, and email. And I put it into the system, the electronic application system. And then I'll send the employer a PDF, which gives examples of, hey, if you've never been in this system before, you're in this system, or I'm in the system, but I don't know any of my stuff. They send that to all the employees. And all the employees then log onto the computer, put the code that we've given them that associates them with this company.
Yeah.
They put their name, their dates of birth, social security number, all that jazz. And then they put in their last, 5 years medical stuff. And you really in there want to just put, I take this prescription, I had this surgery, I had this condition, I have this. If you broke your arm in 82, they don't care. Yeah. You'll get some people who spend hours putting every single, like I had a baby in 82, I had a C-section in 84, I had this, and you're reading it like, I wish they would have called me because like they don't need all that. So they go through all that process anyways.
What's the worst version of that process you've ever seen? Like, have you seen that fail horribly for a business?
Well, yes, because basically the second I see a $16,000 drug in a 10 life group, toast.
Yeah.
And I immediately can call them and say, we're going to have to go to the ACA. This is going to be our option. Or we can go to your employees, all of them, and say, hey, depending on how big the business is, sometimes I could talk to, Bob and say, hey, Bob, what are your thoughts on moving to this over here? We're off to everybody. And sometimes Bob says yes, and sometimes Bob says no. And just up to, again, you can't force anybody off a plan. There's absolutely nothing, if you force people off a plan, you're going to have some people knocking on your door.
Yeah. Some people in fancy suits.
Not the people that you want.
Yeah. Interesting. One of the biggest problems that you face when you're trying to create a podcast is the lack of time to make your podcast great. It takes hours of your time to plan, record, and edit, and then eventually post your content. Here at the Cincinnati Podcast Studio, we help brands and entrepreneurs build their own podcast with services from planning to posting. We've got you covered. So come to our studio located in downtown Cincinnati and let us help you plan your show, coach you on how to be a great host, record, edit, and post your show. If you're interested in starting your own show, check us out at CincinnatiPodcastStudio.com. So then tell me, I'm curious about the nightmares. There are health insurance people talk about with such a negative connotation. What are some of these things that you've walked into that you're just like, oh my gosh, I can't believe this?
So this is when I was in service, this scenario, and it's just awful, but it kind of made me every day you realize your life's all right. Wonderful lady. I started off, I was working for Humana at the time, and she had gone to see this doctor, and then they switched from Anthem to Humana, switched the company she was working for, switched. But she kept seeing that doctor, didn't realize the doctor was out of network. So she'd seen this cancer doctor out of network, did not know what she was doing. She's 70 years old or whatever she's doing. And then she gets this giant bill of $400,000 that, not going to pay anything. The carrier's not going to pay the out-of-network benefits. Start off, talking to her. Her son was in insurance. And I was fresh in. I was probably 29, 30 years old talking to this lady. But once I dig my heels into something, I really so I started working, talking to her, and I ended up talking to the head, the president of Wisconsin, Humana guy, the president of Humana, 30-year-old me, calling him this is ridiculous. What's going on? She owes $400,000. It's not her fault. Her employer switched and doing all this. And he said, after months of trying to get this thing done, he said, Scott, appreciate your efforts. You are, what we want to work for us, but a contract, a contract is a contract. If we pay this $400,000 claim, every other $400,000 claim that comes, we have to pay those too. We're going to be out of business. And I was like, oh. So he's black and white. He's like, Scott, fat lady sang. I'm sorry. And I was just devastated. I was like, how am I going to tell this lady? How am I going to tell, her name is Ruby. How am I gonna tell Ruby this? What am I going to do? And so I get, sitting there, I got to call Ruby. My boss walks over. She says, she kind of knew what was going on. She's like, let me call Ruby. Scott, you're too invested. I was like, absolutely not. I was like, I'm in this. I was like, I got to tell her. It's going to hurt a lot. Mm-hmm. And I'm going to get yelled at and get screamed at by her son's in insurance, and he's going to be mad. Call him up. This lady, hey, Ruby, it's Scott. And she's like, oh, hey, good to talk to you. My son's here. Rings on the phone like, hey, claim's not going to pay. Mm. And it's a contract. There's nothing we can do. And she said, Scott, stop. You've been fighting this case for 6 months. You have done more for me than I could have imagined anyone ever doing. It's okay. I have cancer. I'm going to die sooner or later, like everybody else. And I'm going to have a big bill that I have to figure out. And then her son says, yeah, Scott. I was like, oh, here it comes. Thank you. What? Mm-hmm. I work in insurance. Nobody's ever done. I can't imagine anyone doing what you've done. And every day from that point, I wake up and I say, hey, I'm not having a bad day. I'm doing all right. And insurance can be awful like that. Mm-hmm. And people go through it every day. And it's in the news and the media, claims denying. And my job is to try to get those claims paid, but sometimes you're not going to get them paid. And if you're looking for someone with butterflies and kittens and telling you like, hey, I'm not your guy. I'm straightforward. This is either awesome or this is awful. It is what it is. And my goal is to make it less awful.
That makes sense. Oh man, interesting.
Yeah. So that's probably the worst, denied claim, have to tell somebody this is awful. What's going on?
How could that have been avoided?
Well, the carriers, it's consumer driven. So she would have, hey, I changed carriers. You call my doctor and make sure they're in network. When you switch plans or your company switches, we aren't taught this for whatever reason, but instantly should go through your doctor. Like, hey, it's just in network. Make sure.
Why does that feel like it's a really hard process to figure out? It's in network.
It's hard. It's impossible. The problem is you go online to the whatever carrier you want to say. Contracts change literally every day. So you can go online and see Dr. Smith. And Dr. Smith is actually out of network. And nobody knows because it hasn't been changed on the website yet. They try to keep it up to date. And you don't run into it as much as you would think. I mean, literally these, the main carriers, the UHCs, the Anthems, Medical Mutuals, they're, almost everybody is in network. It's pretty hard to find somebody that's not in network.
Yeah.
Unless it's a very specialized thing.
Yeah.
If it's a very specialized thing, there's a chance. But, as I say that, the chances of someone going out of network is, I've probably only seen a handful of claims that are actually out of network. It's not as prevalent as you think.
So from your perspective as someone who's an insider on the health insurance industry, what do you think some of the biggest problems are inside of the industry right now?
Just transparency. Just, there's products that are coming out, soon that where you can basically look on the website, say, hey, if I go to Mercy Hospital, it's going to cost me $500. If I go to TriHealth or whatever, it's going to cost $1,500. Well, which one are you going to choose?
Yeah.
Hey, this drug costs this. You go here, you cost that. Which one are you going to choose? So, but it really, it takes a lot of effort from the average Joe who has time to look at all those things.
Well, then how do we solve that?
It's just education. You make the time or pay the dollar. Make the time or pay the dollar.
As a business owner myself, I'm like, man, that sounds like a nice little niche to get into. Someone should start a business price comparing for people.
And that's what the carriers are doing now. They're legit coming out, and there's options to where you can get the cost, find out where you want to go, find out what you're doing, find all these things. Yeah. It's getting there, but it also takes effort from, I'm in this world every day and I don't go online and do the things I'm supposed to do. Because I just, it'll be fine. It'll be fine. But when it's not fine, you're mad. But then you only have who to blame for not doing it.
Yeah.
You blame everybody else, but you went to the doctor and you didn't look it up.
So then when you see, especially within the last 6 months, there's been a lot of anti-health insurance sentiment, especially with the case of Luigi Mangione and other stuff like that. What do you sympathize or empathize with those people who are feeling those things because of what you see all the time?
Yeah, there might be. I mean, claims get denied, and then you find out that some robot did it. Or claims get denied because did the consultant or did the broker or did the whomever, did they make the call? Did they fight the battle? Did they do the appeals? Did they do all the things? Did they fight the fight? Or did they just that's denied, sorry. You got to fight, you got to have someone in your corner. And that's what my job is. I'm in your corner. Like if something's broken, call my team, call us. We can't help you if we don't know what's broken. And that's the difference of kind of what, what's out there and what we're doing and what people are doing is, if you get a guy who comes in, hey, sign this, talk to you in a couple, at renewal, have a good one. Or do you have someone that says like, hey, this claim's denied. I have Scott's cell phone number. I can call him. He's going to help me. He's got my back. That's the difference.
Do you find that people get a denial claim and they call you and you actually have the ability to potentially make something better out of it?
Absolutely. Like, a lot of people claims get denied and they see denial, but they don't see what you actually owe. So the carriers can deny a claim. I had this just the other day. They denied the claim. So I got an email. Hey, look at this explanation of benefits. This is denied. And I said, great, but look at how much you owe. $0. Because the hospital had to send stuff to the insurance company. And per their contract, they have to send it before they get paid. Right? So then they're basically like, oh, I said, don't worry about it. If you get a bill from the hospital, if you get a bill from the hospital, don't pay it. Biggest thing I can say is don't pay your medical bills the second you get it. Wait for your explanation of benefits. Because it's a lot. It's harder to get the money from the doctor's office, right? Than to just hang tight and hey, and I've called doctors. Hey, can you hold off on that payment for like a month so my client can make sure everything's paid? Oh yeah, no problem.
Well, so that's interesting because my own self, when I get EOBs, an explanation of benefits, I often see them coming in at a higher dollar figure than the bill actually is from the doctor. Like that's like a normal thing that I've seen where I'm like, oh, really? Am I going to owe this? And then the actual bill comes in and is, oh, it's not that.
Well, they're sending you the bill without when you're getting that first bill, it doesn't have their contracted amount in it. Could be less, could be more. I mean, like they could, if this is a $500 procedure and with this carrier, they charge $500, but UHC pays them $1,000. Well, that's why it's more because it's just per the contract. Don't pay attention to that. Pay attention to what you owe. All you should care about is what you owe.
Yeah, interesting. Because you always see when you get an EOB, it says this is not a bill.
Right.
So like, what you're telling me is that you should always see an EOB before you pay a bill.
Yes, please.
Okay. So then say a bill comes in and it's more expensive than the EOB. What do you do in that situation?
Call the doctor's office and say, I've got an EOB, but per your contract, this is the charge. Why are you charging more? If they say, oh, we'll have to send it back to the insurance company. Great.
Interesting. Okay, that's great. That's a great tip right there.
Yeah, just call the doctor. Why does this say this? We'll send that back. We're sorry. We'll send that back to get this corrected. You may owe that more, you may not, but don't pay it on the spot. Now, for the record, lawyers, I'm not saying do not pay your bills.
Do you catch that? Yeah, that's actually a really smart tip. Do you have other things that you try to tell people that are like best practices when dealing with health insurance?
On the employer side, there's going to be an increase. The chance you get a decrease are slim. But being open to your population, a lot of people hide all their stuff. what's going on, what's happening. Like be open and upfront as much as you can.
Mm-hmm.
You know, and you know, you can't control. I always tell people you can't control everyone's health. You're gonna have some sick people in your plan.
Mm-hmm.
You may have a really bad year. Nothing you can do about it. Nothing I can do about it. Not anyone can do it. But I mean, unfortunately, the insurance companies are here to make money, right? They are. It's for profit. So if they, you know, I had a client that, you know, in their funds report, they, you know, the carrier expected them to spend $30,000 and the group spent $80,000 in health insurance. How do you think that renewal was?
Not great.
Not great. But I can show the client, hey, this is why. And it takes that bitterness a little bit. I don't like it, but I have an answer.
Yeah.
For some of the other products, you're just kind of thrown to the wind. You know, all the big guys, all the carrier reps, all the carriers, they all really do care. Like the people that we work with every day. I mean, I have some fantastic relationships with the salespeople, with the managers of the carriers. I've been doing this 20 years. No one's in there to rip you off. That's the number one thing. They're not out there to rip you off. But like anybody else, they have to make $1. If they lost, you know, $50,000 on you, they got to make it up somehow. And the second thing would be is don't just auto renew. Always shop your plan. Always, every year, shop it. Because there's some carrier out there that might have a new tool, have new this, have new that. And then, you know, another thing is, you know, be creative. I have a group that I'm working on right now that they do like age banded versus composite means. So age banded is like you're 32, so your cost is $300. I'm 45, so mine's $400. My grandpa's 60, so his rate's $1,000. That's age banded.
Okay.
Composite, there's only 4 tiers. There's the employee only, employee spouse, employee child, family rate. 4 tiers. Well, there's plans called grandmothered plans, which means that they're from before 2010, right? All this other fancy stuff has come. They've decided to stay with this plan. They're allowed to. They're sticking with it forever. Well, once the group gets above 10 employees, they go from age banded to composite. So everyone had their own costs. Now there's 4 costs. So it didn't evenly disperse all the costs. So some people got a really big increase. Like one guy got like $400 increase. Someone's went down by $200, right? Just how you do it. And the person I was speaking with was just like, I got to switch plans. I got to figure this out. Like that guy's not fair. It costs an extra $400, this, that, and the other. And so I was like quoting out her plan, thinking like all these creative ideas of how can I help her? How can I do what's going on? And it hit me. Well, why don't we just go back to the composite rates? Why don't we just take the percentage increase that they got? So I got out, you know, and I am not an Excel person by any stretch of the imagination. I am not fancy. But I took the age banded rates, and I added 15%, which is what their increase was. And then I looked at the increased cost with the composite rates. And when I added that 15% to this, guess what? It
was the same.
Exactly the same. So I just called her and I said, the carrier doesn't care what you're charging the employees. They care less. Just pay your bill at the beginning of every month. And she said, brilliant. I didn't know I could do that. So what could have been a super complicated leaving that carrier doing all these things was just like, oh no, just go back to what you were doing. The carrier made this rule, sure.
And then they just rearrange the way they take the draws from employees.
From payroll.
Yeah.
That's it.
Oh, that's smart. Okay. It took me a second to catch up with you there, but that's actually really smart.
Just change it in payroll.
Yeah.
Whatever the charge is.
Okay.
Move it over. So then it went from that one guy, instead of getting a $400 increase, got a $200 increase.
Genius.
Because dispersed everybody else's costs throughout the portion of the plan.
Huh. That's interesting. Okay. So there have been a lot of technical things that you've said today that could be confusing for some people.
Sure.
So if you were to tell people right now the thing that they need to think about for their health insurance. So these are business owners, they're dealing with health insurance, or they may even be employees. What is the one thing that you tell everybody to be paying attention to when it comes to time for probably renewal?
Shop.
Shop.
Do it every year. It's not hard. Have your employees fill out the applications. If you get it, if you get like a 5% increase or a 6% increase, okay, like just and you want to just be like, ugh, I'm done. I don't want to deal with this. I hate it. That's fine. But after the 5th year of taking a 5% increase, it's no longer a 5% increase. Now it's a 25% increase. If you can go and move things around and doing whatever, you can really affect your plans. And as you grow, like don't do the same thing you were doing with the 5 Life group. If you've grown to 20 or 30 employees, don't do the same thing.
Yeah.
That's crazy. Like shop, ask your consultant, hey, like am I eligible for this level funded? Am I eligible for this self-funded consortium, whatever it's going to be? What are we, what can we do? I mean, if you have to ask the question to your consultant, I question if you should maybe shop your consultant.
Yeah.
Because that's not your job to ask the questions.
Yeah. So then you talk kind of those 3 main plans. Are there other things out there that exist that don't really go through somebody like yourself?
Yeah. I mean, you can just so my team can handle almost everything. So we can do individual market. Medicare obviously is Medicare. There's tools that are outside of this main platform that are new to the market within 2 years that we're learning about right now that, is kind of like the ICRA that I was talking about, but it's just different. And so, what I've learned in the past, 6 months and last year, if you had told me I would even mention the word ICRA or individual coverage health reimbursement, I would have said, no way. Employers' costs. I have groups that their employee rate is $700. For a small business, if you have 5 people, how do you pay that? And they want out, but they want to help their people. Well, insurance is so expensive now. Maybe this is an option. Just don't pigeonhole yourself into what the last 5 years you've done. Figure out. Just ask, what other options do we have in the market? Is the best thing you can do.
I love it. And then just from a logistics standpoint, people don't pay you for your services.
I would like to say I'm completely free. I don't cost you anything, which is true before you're a client. I will help you. I will consult with you. I will run you quotes. I will do all the things that you need to shop your plan. Once you find a plan, then there is a commission that's built into the premium when you pay it. So in that premium, some carriers pay $30, some pay $40 per employee on the plan. So when you pay your bill, then they pay us that $30, $40 commission to help service your plan throughout the course of the year.
Okay.
So we got to make money to keep the lights on and to pay and do those things, but you're never writing me, Scott Hetzel, a check. You're never writing my company a check. You are writing your insurance company a check, and then that's coming out. That's coming out from there.
Dude, Scott, this has been great. As somebody who is a, let's say, healthcare dunce, this has been great to learn from, and I hope that everyone else listening has been the same. The thing I do at the end of every single episode is I give you your BNI pitch time.
My BNI pitch time.
So that's your camera. Imagine people have not heard a single thing from you yet. And give them your pitch and how they can get in contact with you.
Sure. So Scott Hetzel, work for Assured Partners. I mainly focus on businesses of 1 employee up to about 50 to 100 employees. I'm mainly focusing on really small family-owned businesses, from 10 to 20 employees. Completely free to have a consulting time to talk, to go over your plans, do whatnot. And it's a great opportunity to just look at what you have. If you have something, I can look at that for free. If you don't have anything, I can help you at least get through the quoting process and see what could work. It's a great opportunity to help you save money and know that somebody actually really cares about what you're paying for your insurance. And
it's true, you really care, you really do. How can they get in touch with you?
You can call. I give everyone my cell phone, so it's 513-520-0908. My email is scott.hetzel, Hetzel, @assuredpartners.com.
Dude, it's awesome. And it's true, though. I know that people trust you deeply because of the amount of business you do. The amount of people that come to you and are willing to work with you proves that you are trustworthy, that you care, and you try to get people the best version of whatever they can for their company. So thank you so much for being here today, man. This was great.
I appreciate it, man. Thank you.
Yeah. Thanks so much for listening to the Cincinnati Business Podcast. If you like the show, the best way to support us is to like, comment, and subscribe so we can keep bringing you fantastic content just like this. And if you are a greater Cincinnati-based business owner who has something you want to share with the world, reach out to me at brian@cincinnatipodcaststudio.com.